Okay guys, so just a quick Mullen update video. Let's take a look at what's been happening with Mullen Automotive in the last few days. As you guys know, I've been incredibly frustrated by Mullen Automotive. I don't think we're going to be going up anytime soon. Any of the smaller rallies have literally been dead cat bounces, which basically means that it gives like an indication that it's going to swing upwards and then it comes crashing back down. Another swing upwards, then it comes crashing back down. And the problem is we've fallen 95% just this year in the stock price. The 52-week high is $38, and currently we're at a 52-week low sitting at 14 cents. And the crowd wisdom is very negative. Even though the news sentiment is positive, people are seeing it as a bit of a value play, if you want to call it that. But at this point, I think it's literally gambling. I wouldn't be putting my money in Mullen anytime soon. Some people are saying it's a bargain stock. So yeah, if you want to invest a couple $100 that you are willing to lose, then yeah, probably the cheapest price you'll get for Mullen right now. But is it worth your investment? I mean, as of now, I don't even think they've proven anything. If anything, they're still trying to stay afloat and they're raising capital. In fact, the company announced a resale of up to 2.33 billion shares just this morning, which will dilute the value of the common stock for everyone anyway. It's really not looking good for investors. Now, I want to show you guys the chart based on what insiders have said and whether it's a buy or a sell. So if we look at different points in the graph, so right now we're at around 17 cents, so very near the bottom, the 52-week bottom of 14 cents. So if we see what insiders are saying, right now we're saying that it's pretty much 50-50. One is saying a sell and one is saying a buy. But the majority of the times we've seen like it's just gone downwards, to be honest. It's been pretty much sell, 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 in my opinion, unless they believe in the long-term potential of Mullen. The earnings for Mullen, as you know, Mullen is still not profit making. They're making net losses, but they have been reducing their net losses. So from Q2 2022, we had a substantial net loss. So the EPS was negative $15.85 per share. And now it is sitting at negative $1.3 per share. So it is a substantial improvement, and revenues have also increased compared to Q2 of 2022. And Q1 was pretty good, and Q2 of 2023 was also not as bad as it was in the past. So they are improving their earnings, but the main thing is that we're most concerned about as investors is that the return on equity is negative 1,062.72%. Now, there's a really interesting article I saw on TipRanks that I personally agree with as well, and they've said that the Mullen management itself, who made the admission in a press release, and they've said that since March 31st, 2023, the company's stock has declined over 95% from $3.25 per share to 16 cents per share on June 20th, 2023. And this is the part that's interesting. They've said that Mullen isn't fessing up here to having a rotten stock. Obviously, they're not going to say that their business is crap. They've actually done the contrary. They're actually highlighting the fact that the dramatic decline in price is a mistake that investors are making. And I do think that, yes, Mullen is a very speculated stock. I mean, look how much talk there is on YouTube. You guys watching this video, we are speculating on this stock. And I think that, of course, they're trying to push through. They're trying to, but the thing is, there are other companies that are pushing through more successfully. I mean, Lucid just signed a deal with Aston Martin. So Mullen has tough competition ahead of itself. And in the EV space, it's all about the best technological players that can benefit from economies of scale and penetrate the markets and mass produce and create revenues. And if you're taking too long to do that, then just the cost of running operations ends up causing loss-making companies. But in Mullen's defense, it's important to note that they have around $135 million in cash with only around $7 million-ish in debt, which isn't too bad. So they do have enough of a war chest to continue running operations and hopefully turning into a profit-making company. Because I do believe that if they're able to sign some huge deals and actually start making profits, the stock price will rally more than any other stock price would rally in this penny stock sort of territory. See, the stock is speculated because people have invested in it and believe in it. And obviously people have gotten scared with how badly Mullen has performed, especially with all the drama with the NASDAQ $1 rating and then the reverse stock split stuff. There was just so much happening against Mullen. So investors have pulled out, which Mullen are trying to say is a mistake. But I really do think that if a stock is so speculated, if they have one or two big bangs when it comes to positive news, profits, huge deal signups, some mainstream company like how Lucid partnered with Aston Martin, that's when they will see their stock price rally and then maybe reach some of its previous highs. Definitely not its all-time high anytime soon. I do think that was overinflated, and I'll explain in another video why. So if you do want to know about that, hit that like button and that subscribe button and that bell notification, because I do cover Mullen and different EV stocks on this channel quite regularly. And another thing I like to add is that Mullen might benefit from buying different companies. Like last year, they bought Bollinger Motors and ELMS assets. Now, the thing is, it's also important to note that these acquisitions are very risky. It could mean that Mullen burns through this $135 million that it has in cash that could have been used towards other goals and directions for its operations. But also acquisitions could help save itself. So before I wrap up this video, just a quick caveat. They've said in this article, Investors Observer, that the last report showed that they had around over 60.3 million in cash and short-term investments and around 14.8 million in accounts payable and 121 million in total current liabilities. Now, if you compare it to the company's quarterly expenses, they have had over 67.9 million in operating expenses in the first quarter and 73.6 million in the previous quarter. So even if the company cuts costs and starts receiving income, it will need to raise capital soon. And that kind of leads me to my point that they are announcing a resale of up to 2.33 billion shares this morning, of course, to raise capital. So is that a concern? Is Mullen going downhill? Guys, comment down below in the comments. Thank you guys for watching. Also, none of this is financial advice, and I'm just here to bring you the latest news and my two takes on it. And if you have any opinions and comments, please keep them down below because I do want to hear from you. Bye, guys.